So as he said, I'm Daniel Flowe. I am on the digital identity team at the London Stock Exchange Group. We have embraced the acronym LSEG that rolls right off the tongue. But we're here to talk about financial inclusivity and how identity plays against financial inclusivity in some cases. So we'll start with the good news that the digital economy has been transformative to many people groups that were in need of lifting up. So this is a really interesting study that simply tracks the availability of high-quality internet in Nigeria and Tanzania. And simply making 3G and 4G internet broadly available dropped poverty rates in those two countries by 7% over the case of about 5 years. So tremendous impacts simply from making reasonably high quality internet available. And I think everyone in this room would call 3G and 4G maybe not reasonably high quality internet these days. And similarly, you see the massive progress we've made with unbanked populations. So in absolute terms, the number of unbanked in the world have dropped by over 1 billion as the world's population has grown over the last decade. So really incredible progress in bringing people up and including them. But what we'll talk about today is how incredibly important identity is for that inclusivity, some of the struggles with access to identity, and then once people have access to identity, some of the deep underlying biases in the tools used to verify those identities. So lack of identity is a tremendous problem globally, particularly as we look to move on to the digital economy and transact digitally. The internet was not created with an identity layer. All the tools that we use to convert a real-world identity into a digital identity are workarounds at some level. And we have 1 in 8 people globally that do not have an identity that can be confirmed digitally. What's even more critical than that is if we look at low-income countries, 1 in 2 women in low-income countries do not have an identity that can be verified. So these people are excluded from the digital economy. They're excluded from the global banking infrastructure by default because there's no way to comply with AML directives, the Bank Secrecy Act, or any other of the global directives because there are no digitally verifiable identities for people. And once people have identity that can be verified digitally, they go through this process that I think everyone in the room is familiar with. You dig your ID out of your pocket, you dig your phone out of the other pocket, you play the trombone with it, you take a selfie, and you send it through to be verified. And I think there's a presumption that these tools are fair and equitable, and that everyone is treated. You're ahead of me here. I see you shaking your head. So here's an interesting comparison of false negative and false positives. So false negative being I'm rejected when I should be approved. False positive being I'm approved when I should be rejected. So if you have a lighter skin tone or a Caucasian, the combined values of false negative and false positive are about 3%. So if you have a population of 100 people, 97 of them will be appropriately, swiftly, and automatically verified and onboarded. If you have a darker skin tone, so we use the Monk scale for this. So the Monk scale is human skin tones from 1 to 10. We look at 8, 9, and 10 for this. The combination of false negative and false positive is almost 20%. So instead of 97 out of 100 people, we're now down to 4 out of 5. More damningly, the US GSA just completed a really comprehensive assay of 5 different prominent biometric vendors. And they found that some of the false negative rates in a few cases were around 50%. Every other person with a dark skin tone was falsely rejected when certain vendors were used. And they were smart enough not to say who the vendors were. And even if I knew, I wouldn't tell you because that wouldn't be very good. But you see that the experience across these demographic categories, age, gender, race, ethnicity, and skin tone, is incredibly varied. and the experience of being onboarded, which has to happen. We have to verify identities. We have to protect our global financial infrastructure. We have to comply with regulation. But again, this is not applied evenly. We believe one of the solutions is increased adoption and rollout of electronic identities. An electronic identity, those of you from the Nordics say, yes, this is so 10 years ago. Thanks for bringing this up. Those of you from my home country say, please explain EIDs to me. So what we're talking about is a representation of a real world identity bound to digital artifacts. And the success story I love to talk about is Aadhaar. So if you look at Aadhaar over a 10-year period, not only did India's UIDAI successfully digitize the identities of 1 billion people, the results on lifting people out of poverty were incredible. At the beginning of the Aadhaar project, 27% of the Indian population qualified as being in extreme poverty. At the conclusion of 10 years after the Aadhaar project, it was 0.8%. The amount of human suffering that was relieved by this identity verification project is tremendous. There are very few things in the world that I think have done this much good in that period of time as Aadhaar. This is a quote from Paul Romer, World Bank chief economist and Nobel laureate, that Aadhaar is the most sophisticated ID program in the world. It's provided millions of Indians with access to public services and financial inclusion, fundamentally transforming the country's economic landscape. So EIDs globally are increasing adoption. We're seeing primarily in the Southern Hemisphere, but for those of you in the UK, there's a framework. For those of you in the EU, new digital wallet legislation says that you as a resident must have an identity and a digital wallet by January of 26. So we're anticipating tremendous progress here. And the key with these digital identities, with these EIDs, is that because we're not reliant on an algorithm created by a third-party vendor that was built and tested on a set of data that may not be representative of the population, all of these biases are stripped away. This is administered by the central government. These are, or they're public-private partnerships, but in any event, we're essentially removing those inherent biases from the training data and from a lot of the algorithms used in the space. So a lot of the world's population has access. They estimate around 3 billion people have access to an EID today, and we anticipate many more. One of the leaders in this is MOSIP. So they're a nonprofit that is sponsored by the Bill and Melinda Gates Foundation and the Tata Foundation. They have an open source EID platform. It's been adopted by the Philippines, so PhilSys is based on MOSIP. Burkina Faso, they have well over 100 million people around the world that have a verifiable EID that's based on this nonprofit open source platform called MOSIP. So in addition to encouraging the adoption of EIDs, the rollout of those EIDs as a step towards financial inclusivity and the reduction in bias, there's really 4 things that we should all come to expect from our identity vendors. And that is diverse training data and algorithmic fairness. So those of you that have any influence over the selection of identity verification tools, this should be a key part of what you ask vendors. What does your set of training data look like? Is your algorithm tested for fairness? How does your algorithm perform across multiple ethnicities, genders, and ages? We also really believe that this is a gap in policy and regulation, that many governments have an obligation to step in and ensure that all of their citizens are fairly treated and appropriately identified. And then finally, public awareness and education. Each of you should know that there's a massive difference in how you're treated based on your skin tone for a number of these vendors. Now, there are vendors in the space that are leading the way, that have algorithms that are tested for fairness, that have diverse training data, and these should be applauded, these should be emphasized, and those that don't should have a lot of questions asked of them. So I think I have done it in less than 15 minutes. So I don't know if we have time for questions or if we should move on to the next one.
You're absolutely right. If there's a question in the room, we can certainly take it. There's a question at the back. I'm going to go and get the mic for you. 1 second. There we go.
Thank you. That was a great presentation. I was wondering, these countries that have adopted electronic identification, have they seen reductions in fraud and identity theft as a result?
Yes, because the electronic IDs are fundamentally they meet the EU, like the SCA, so you have a much stronger identity verification process. It's a much stronger level of assurance because it typically involves a biometric element and then either a device that's in that person's control or knowledge only that person has. So you not only see increased inclusivity, a more frictionless process for consumers onboarding, but as a result of the stronger identity verification, you see reduction in fraud, theft, and other financial crime. That's a good, it varies. Let me get actual numbers for you. I don't want to make anything up.
Thank you. That question is absolutely perfect because it segues us beautifully into our next section, which is going to be a panel discussion on fintech fraud and ID verification. So when we've just heard from Daniel on ID and from Jazz majoring on financial crime, and we've got Matt Cumbers from NatWest, Chief Risk Officer there. We're going to reset the stage and get that panel underway in the next couple of minutes. So Daniel, thank you very much indeed.